It costs thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
And welcome. Okay, so it's interesting. We're going to have our rate cut on Wednesday. Everybody's all excited. Well, I'm not excited because a couple of things I'm not excited about that could be terrible. First of all, I think they're going to start QE all over again. That'd be a disaster. They stopped QT, remember, December 1st or 2nd. And QT, remember, they pulled out a record amount of liquidity out of the system, $2.4 trillion. They drained that money out of the financial system. They've been doing that since 2022. Now it's stopped. But what's going to happen is that this will make the tech stocks rally. I think they're going to start rallying. I think you'll see money shifting to those tech stocks. And the other thing that they're going to do is start this QE again. I think they'll do it under a different name. And I think they're going to start putting in about $8 trillion a month again. So, and the reason they're doing all this is because the banking system is in trouble. Here, take a look at this. These are unrealized losses right here. Look at that, how long they've been hiding these unrealized losses. Huge, $600 billion. So my guess is they did QTs. They started mid-2022 to pull that liquidity out, to stop all this inflation. It didn't work. Their target was 2%. They're down to 3%. That's going to be bad for Wednesday because, remember, one of the reasons why it didn't work September 17th of 2024, when they cut the rate 50 basis points, thinking that the 10-year Treasury yield would drop big, making car payments and so forth much cheaper. It went up. It rallied up because the market, the bond market, said no. At 50 basis points, that's not nearly enough to to stimulate the economy. And so I'm afraid that when they do this on Wednesday, we have the same problem. We still have inflation that has not hit target, and that was one of the three reasons it didn't work in September 2024, and that the bond market, the 10-year Treasury yield rally, we'll see. But so again, we got problems with the banks. That's a red flag. Nobody's talking about it. And the consequences, again, to this QE, which they're going to start, I can tell you. I told my members a little while ago, I think it was about 4 or 5 weeks ago, don't worry about a market crash this year. It's not going to happen. And here's why, because of what's going on. They're going to start QE again. And the consequences are terrible. We saw the consequences in the past. When you start injecting this money into the financial system, at the same time you're cutting rates, inflation went from 2 to 9%. Remember that? 2 to 9%. Went from, I think it was 2020 to 2022, 2 to 9%. What are you, nuts? And the dollar also gets weak. So that means everything we buy is more expensive. And so inflation is going to outpace wages again, making everybody poorer again. So what the hell are we doing here? Why are we doing this? Because again, Trump knows that he's in trouble with the people, that people are angry that the mortgage rates are high, automobile rates are high, credit card rates are high. I mean, he's done a wonderful job on all these other things, what he's done over making peace and all these other, shutting the border down, protecting us from evil, making sure you get into these cities to clean them up. He's done a terrific job. But folks aren't feeling it in their wallet, so they're upset. So he is mad at, and this is why Trump has been mad at Powell. But Trump should just tell folks, look, I'm sorry. It's going to take time. If I cut rates to make you feel good, just so that your confidence is up instead of being the lowest since July 2024. So your sentiment is up instead of making a record low. I got to stick with the record low consumer sentiment. I got to stick with the consumer confidence at this lowest since 2024 because I got to do what's right by you. Do you realize, folks, if I go in and start QE again, and I'll have to do it under another name, I have to fake you out. But you're going to have a problem. Everything's going to become more expensive. All the goods you're paying, the prices are going to go up faster than your wages. And that's what he should say. And he said, I'm going to do what's right. I only got 4 years left. I'm not running again. So I'm going to do what's right. What's not, I don't care if it's popular or not. That's what he should do. You can't put $8 billion back into the system again and not have the consequences of a weak dollar and consequences of inflation. What the hell? I mean, just to get, accolades. Oh, gee, I love you now. My sentiment as a consumer went from a record low of 51%. Now it's back up to 53%. But the consumer's going to feel good for about maybe 3 months, and then he gets screwed. He's going to get screwed big. He's going to lose big. So that's a terrible thing. Let's not do that. I'm really disappointed he's doing that. Now, this also identifies the banks are in trouble, and that's what he should tell the folks. Look, folks, the banks are upside down. They've hidden losses of $600 billion. The reason they could hide them, and here's the chart right here. There's the $600 billion, see it? And they didn't have to disclose them unless they sold them. If they sold those losses to Goldman Sachs or to the Federal Reserve, which many times they do, then they got to disclose them. But they haven't. They've been able to get away from it since 2020 or mid-2020. They haven't had a disclosure. So when you saw Goldman Sachs or one of the bank stocks going up, or J.P. Morgan, we bought it, but we knew what was going on. We knew there was all kinds of losses. These banks are in trouble, but so what? So we just bought it anyways because we don't care. The beautiful thing about having the skills to short as well as going long, there's no right or wrong. We don't care what the hell they do. Because the only people that's got to really be fearful in the stock market are those people who do not have the tool to sell short. You're going to get screwed all the time. You've been getting screwed all the time. You don't make money because you don't short. Sure, you can sit there with your 401k with a market. Remember, for 3 years in a row, market goes up. You think you're rich. You get your statement, throw it in the desk drawer, don't even look at it. But how many people got out of the out of the different crashes? I'll bet you can count them on one hand. Okay, I mean, just think about it. I mean, we had and I'm sure you weren't around in 1931, but we had a 47% crash. 37, we had a 38% crash. But let's go where you were around 1974, 30%. Did you get out of your 401k? No, of course not. How about 2002, when the market went down 23%? Did you get out of your 401k? No, you lost it all. And 2008, right? You lost 38%. Your market went down 38%. 2022, 20%. So your 401ks are going down. And so that's what happens. And if you go down 30%, it's going to take 45% to break even. But when you know how to sell short, yeah, we know what's going on. We interpret what's going on for our gang members, and we prepare ourselves to sell short. And then we go long. We follow the money. It's all about following the money, not the BS. So anyways, the stock, let's talk about the stock buybacks. They're going to start again. Now, they already started QE because of the banks. Do you realize they've already put $35 billion worth of QE back into the market, back into the financial markets? That's a record amount. They already put that. Here we go again. So that means when you go shopping, things are going to be more expensive because your dollar is going to be worth less, for God's sakes. Now, let's talk about the stock buybacks. People don't understand what stock buybacks are. They're artificial. They were outlawed. They were a crime. The one who changed it was Reagan, and he was going to change it when he took over and he became president. His economy was so bad that he made it legal for stock buybacks to clean up his economy. Then he was going to shut it down again because it's a terrible thing, stock buybacks. Awful. The only people that win their stock buybacks are CEOs and Nancy Pelosi, people like her. They make a fortune with stock buybacks. So we're going to start stock buybacks again. They're not going to call it QE. It'll be a different name. But understand what they do. QE simply, when they buy their stock, the CEOs buy their stock, they're just reducing the amount of shares that are outstanding. That pushes earnings up. That pushes the stock price up. But you didn't do anything. It's called unearned increment. You didn't do anything for that. Your earnings goes up, that automatically pushes your stock up. So when you have less shares, if you have 2,000 shares outstanding, you cut it back to 1,000 shares, your earnings go up. But you didn't do anything. It's unearned increment. So stock buybacks, it artificially, just like in 2008, it artificially reinforces an economy that sucks, an unstable economy that sucks. It should be, okay? People should be paying attention, okay, to the stock buybacks. Look, yes, you're going to make money as the stock market goes up, but unless you know how to short, you're going to get killed on the way back down. But again, stock buybacks artificially pumps up a terrible, unstable economy. And we did that from 2008 until 2012. We were only supposed to do it for 90 days. Obama lied to us. Now, the other thing is, we once used to have the greatest nation in the world, because we could outproduce anybody. Our productivity was incredible. And because our productivity was incredible, because we had pension funds. When you could promise an employee when he comes in, he's ready to start work, you say to him, look, I'm going to make sure that you're going to have a wonderful retirement, you and your wife. I'm going to guarantee that. I'm going to guarantee that. And it was guaranteed. But you got to guarantee me you're going to build a beautiful product for me. That's why we were the biggest industrial nation in the world. And then these people on Wall Street and in Congress decided to screw everybody. They said, let's get rid of pension funds. So Wall Street bought all the congressmen and said, we got to get rid of the pension funds. They're costing us too much. So what we'll do is let's first of all outsource the people. Let's outsource our workers. Then when they're outsourced, we can get rid of the pension fund because it's killing us. We could put more money in our pocket. My board of directors, myself as CEO, CFO, my whole team, we're going to make a fortune. And we're going to pay you off, my congressman, to do this. And the congressman did. So pension funds were gone. It started with the outsourcing. Then the pension funds were gone. And then they put in these stupid 401ks, which is not which has never been designed for you as a retirement. 401k was a tax law. They took that tax law that was in place, and that 401k tax law was where CEOs, rich guys, when they went and became CEO of a company, they gave them a membership, an $80,000 membership free to a golf course. Well, that $80,000 membership went into their 401k. Those who had 401ks, that was it, CEOs. Then they said, hey, we can take these 401ks, screw everybody, they won't know the difference, and we'll take a mutual fund, some crap mutual fund, and we'll stick it and shove it down this 401k, and we'll tell them it's a 401k retirement plan. And everybody bought into it. And their word was this: oh, you're lucky. We're getting rid of those terrible pensions. You know, you can be now a Warren Buffett. You can be just like him because you can make your own decisions in what stocks you buy. You're going to be just as rich as this is the crap they were selling. I couldn't believe it. Of course, the 401k is a failed experiment. The guy who started the 401k, look it up. He tells you it's a piece of crap. So this thing, starting QE all over again, is going to be great for traders like us here at Phil's Gang who know how to go long and know how to go short. You've got to learn how to short. All right, we'll be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back. I was listening to Jamie Dimon on Maria's show Sunday. This guy is a fraud. Matter of fact, he should have been put in prison for life because he screwed everybody in the housing business, okay? Remember, he packaged together all the bad loans, mortgages, then he sprinkled a few good ones, and he would sell, J.P. Morgan would sell that package to pension funds, and they made a fortune, and you lost your shirt. That's this guy. Well, here's what he said yesterday. The guy's a liar. Listen to this.
In the short run, it looks like the American consumer is doing fine, is chugging along, companies are making profits, stock markets are high, And that could easily continue.
Okay, stock markets are high. Who makes money in the stock market? 90% of the money goes to the top 1%. That's right. 90% of the money goes in the stock goes to the top 1%. The 401k, I think they're about 28% of the market, something like that. At the end of the day, they never make any money because, again, they always get caught in a crash. But here, let's go back to this, though. He's saying everything's fine, right? It sounds pretty good, doesn't it? All right, so let's go back and see what he's talking about here, right? First of all, he's saying everything's just ducky. Well, wait a minute. The BLS claims layoffs are at a 3-year low. How the hell could that be? How can that be? It's impossible. When there was 4 months, okay, a 4-month downward job revision of 154,000. What are you, nuts? In October, we lost 71,000 jobs alone. In November, we lost another 75,000. Between November 2024, November 2025, we lost 1.1 million jobs. That's a 54% increase over 2024. Now, as we lost 54% more jobs this November, a year ago. In other words, between November 2024, November 2025, we had a 54% increase. Are you nuts? AI contributed just 54,000 jobs. Bankruptcies are up, get this, year to date, big corporations, large corporations, 717, some of the largest corporations have gone bankrupt. That's right. That's a 93% increase since 2022. You want to know why the labor market's bad? That's a 93% increase. That's the most in 15 years. Consumer demand is tanking, reflecting, let's just talk to bankruptcies and big corporations. And across the board, we're talking about big bankruptcies in construction, warehousing, manufacturing. In fact, if you take restaurants like Red Lobster, Hooters, Rubio's, Tijuana Flats, and on and on and on, they're tanking because when you go out to eat, food prices are 28% higher. Now, think about this for a moment. All of these large companies, from construction to warehousing to manufacturing, the proof is right here. 18-wheelers, they're called Class H trucking, 18-wheelers. Orders for 18-wheelers are collapsing. In 90 days, orders fell 47%. Those are the 18-wheelers you see on the road that you're trying to get by in the middle of the night. You're trying to pass these damn things. But it's those 18-wheelers that go coast to coast to provide all the stuff that the restaurants need, all the stuff, construction, warehousing, manufacturing. They move materials. New order trucks have dropped 47% in night. We've never seen that. The last time we saw that was in a recession. And yet, when you listen to Jamie Dimon, everything's just ducky, right?
In the short run, it looks like the American consumer is doing fine, is chugging along, companies are making profits, stock markets are high.
Wait a minute. Well, why don't we talk about the stock market being high? It's a bubble. That's why you got to know how to short. Stock market's not high because of earnings. Never because of earnings. That all changed. I already just told you why that changed. They no longer has anything to do with earnings. It has to do with fraud. It has to do with stock buybacks. So again, going back to these major companies going broke. And the proof, look at your 18-wheelers. I used to own a sawmill. I used to make, I had a company, furniture company, and we had our own sawmill. We cut the trees down, took the lumber off for to build our chairs and tables and stuff. And we could tell when they start shorting the stock market, when our orders for our pallets started to dive. A pallet is one of those things that you see them, a forklift. Let's say you're going to put a refrigerator up into a big truck, right? Well, you put the refrigerator on a pallet. Forklift goes in, puts its forks in it, and lifts it up. That's a pallet. They're made out of wood. We just take all our scraps and sell those pallets, make them and sell them. We could tell way in advance when the market was going down, the economy was going down, because those would tank. And so it's the same thing. Again, you know the economy's going to tank when you start seeing 18-wheelers going down 47%. That's amazing, isn't it? So the White House, so listen to this. This is amazing to me, too. So they're going to go back to QE. They're going to cut rates to please people, which is all nuts. At the end, everybody's going to be pleased. His ratings are going to go up. Everybody's going to love Trump because the rates of mortgages go down, but you're going to suffer because of it. It's only going to be short time. Remember, this whole stock market starting with the first dot-com bubble. We've gotten rid of earnings. Nobody cares about earnings anymore. Who cares about earnings? Who cares about fundamentals? Nobody cares, because the market is rigged with stock buyback. But that's okay. We love it because you can make a ton of money on the way up. But here's the key. You make a ton of money on the way back down. So think about what's going to happen here. So the White House and Wall Street, right? They're trying to mask the economy, tell us how great things are, right? They know it's worsening because you just see the sentiment. Just look at the sentiment readings, the consumer sentiment. People are angry. So when the Fed cut rates by 50 basis points last September, remember what happened? It didn't work. Instead of the 10-year Treasury yield coming down following the short-term 50-point rate, it went up. This is a big issue for Trump, and here's why. Because he's got a bet. Now remember, September of last year, yields went up when the Fed cut rates. That's bad, real bad, okay? And the reason why the bond market said, screw you, Powell, with your 50-point rate cut, it's not going to work. 50 basis points is not enough to stimulate the economy. Inflation is above your target. And also, the U.S. deficit keeps going up because you guys won't cut. We got to attract investors. We got to get them to the auction. They're not coming to the auction anymore. So we're going to move the yields up. That's what happened. Now, Trump is hoping that doesn't happen this time, but I don't see how it's not going to, because the same three things that made the yields go up, they're even worse today. So when the Fed cuts rates by 50 basis points, he's going to now with 25 basis points. So it's a big deal for Trump because, again, ever since that 10-year yield rally, instead of dropping, what happens is this. The national debt, he can't raise money at auctions to fund it over 20 years, 10 years, or 30 years. You're screwed when you can't do that. Because the three biggest nations that buy our treasuries, they're not buying them anymore. Oh, they buy a little bit, but they're mostly buying gold. Now, here's the problem. So he has to now go fund our debt buying T-bills. That's a big problem. Because when you go in and fund our debt by 1 month or 2 months or 12 months, you're screwed because the consequences are horrible. Because the 10-year Treasury yield, okay, it's going to shoot straight up. Mortgages, autos, business loans, all that's going to go up. But, and so the stock market, okay, again, it could go up. It could go up. But, it did last year in September, it could go up. So we could get a short-term rally. So if that's the case, we'll buy, right? But the problem is that if that T-bill purchasing to fund our deficits is killing us. It's killing us because that causes inflation. It causes inflation. And it causes our dollar to go down. So again, this is not going to be good. Now, as far as a trader, I hope the 10-year Treasury yield goes up because we'll catch the market on the way up. So again, the smart institutional money, always understand this. This market has been levitating. On what? Margin debt, increased money supply, that's where you get to money margin debt, and stock buybacks, not earnings. Stop listening to the BS about earnings. It's not earnings. This whole market's been levitating on BS. Margin debt, people can go borrow as much money as they want to go ahead and buy stocks. They don't have money. We call them the tourist investors. They don't have any money, so they go borrow money, and they always buy at the peak. They're called FOMOs. It's not earnings that's driving the market at all. The margin debt, okay, we have a record 38% increase in 12 months. That's how many people have no money to buy stocks, and that's pushing the stock market up. People who can't afford to buy stocks are pushing the market up. Do you understand what that does? When they get their margin debt call, they panic, they have to sell their stock, and then it just starts coming down like a waterfall, man. That's bad news. And again, there's no bad news, good news if you know how to go long, but if you know how to short, then the market's always good. Always good. That's the beautiful place to be in. Now, here's what's happened. Remember, our guys on Wall Street and the very wealthy, I'm talking not the 1%, I'm talking about the 1/100 of 1%. They run everything. They are Congress, right? The 1/100 extremely wealthy people. They're obsessed with increased money supply. They're obsessed with QT. They're obsessed with QE. They don't care about earnings. They could care less because all they want to do, they don't care if the country is strong. They don't care if you're doing well. They don't care about you doing well. They don't care about the country doing well. They're doing well. The 1/100 of 1%. Underneath them is the 1%. But as I said, QEs have severe consequences. Stock buybacks. It's just a bubble. Stock buybacks create these bubbles. That bubble pops, we'll short it, we'll make money. We made money in a bubble going up, we'll make money in a bubble going down. We did that with the dot-coms, we did that to housing financial, we made money up, made money down. We're going to make big money on the way back down on this. But you got to have that skill. If you're sitting there thinking you can make money and you don't know how to short, you're crazy. You're crazy. Now, the whole idea is Wall Street and Congress doesn't care about the working class. They don't care about the middle class. All they're going to do is create a surplus demand for stocks. That's what you do with QE. Just get such a big demand, and it just sets a big trap. Please learn how to sell short, and we'll help you, okay? More tomorrow.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's